Time to demystify a lot of the housing schemes that may make the burden of your purchase a little bit easier. And here to take us through it is Tony Henry from Tormeys Solicitors in Athlone. Good morning, sir.
Good morning. How are you?
Oh, I'm very well.
Great to be back.
Trying to navigate all of these now, where do you want to start?
Well, I think to give a bit of background, I mean, I've been involved in helping people buy and sell houses for over 30 years at this stage. And I remember when I started, I didn't have a house myself. I was renting, myself and my wife were renting a converted attic, one-bedroom converted attic in a private house. And, you know, there were struggles, but there was always the, you know, confidence that you would be able to buy a house, you know. And we were able to buy a small semi-detached house in due course. And I think nowadays it's a totally different situation. And I've got young adult kids as well, and the prospect of them buying a house is just you know, way in the distance at the moment. So I think the trend is that young couples in particular who are buying property are older than they were maybe 30, 20 years ago. And there are a number of circumstances and reasons why that is the case. The first one is that because we had a property crash, there were rules brought in that restricted what kind of lending could be done.
The macro-prudential rules.
Yeah, and everybody knows the stories of how people have to have a certain percentage of the house price. It's 10% for first-time buyers or 20% for non-first-time buyers. So you have to save to get that.
While paying rent in many cases.
That's the key issue there. How are people supposed to prove that they can save? Because they have to show that you have the capacity to save and pay as well. Pay very, very high rents, and then, you know, get the money together some way to try and deal with the balance between the mortgage amount and then there's restrictions on the mortgage amount you can get. It's 4 times salary, you know, and things like that. So
but the central bank is independent of government, so
true.
These are the rules they feel are appropriate.
Yeah, absolutely. But there is a kind of a vicious circle then because the cost of materials has gone up so much. It's really, really expensive to build a house. So the new houses that are coming on the market are really expensive. Developers aren't really that keen to get involved because they are so expensive to build and there's no guarantee that they're going to sell. So that means that the existing housing stock are more expensive because there's a lack of supply. So you've got this kind of horrendous kind of, you know, circle of circumstances which are leading people to find it very, very, very difficult to buy their first home, but also maybe couples bought a small flat or a small apartment and they've got family now and they want to upgrade to a bigger property. Again, they're struggling to get the funds together to get it sorted out.
And then on the other side, those who are perhaps like yourself, finding their mature kids have moved on, maybe the house is bigger than their needs, there's very little stock to move down into, to downsize or right size, some people call it.
Yeah, now there was a housing report that came out last week or the week before, which confirmed that there's nearly 500,000 too few houses in this country. 500,000, or 250,000. That's just such a huge amount of houses. We don't have the manpower or the expertise or the people to build those type of numbers. So again, you're really scratching your head, and it has been a problem for successive housing ministers who haven't got to the solution as yet.
Well, under the latest strategy, Housing for All, there are some market interventions the state is making.
Yeah. They're limited in their scope and ability, but they can benefit people hugely if they just investigate them and look into them and maybe think a little bit outside the box. Some of them, don't give you full ownership of the property, but that's maybe better than paying rent on a property you're never going to own. So there are schemes available that people maybe just aren't fully aware of or a bit concerned or too cautious to investigate, but there may be some that would benefit them if they just did a bit more digging and delving into it.
Can you select one to start?
Well, the first one and the one that lots and lots of my clients avail of is the Help to Buy scheme. So the Help to Buy scheme is a grant, and it applies to new houses only, and it also only applies to people who have never owned a house before. So 30,000, it's great. It's a help, but again, it only applies to new property. So if you're looking at a second-hand property, this will not apply to you. So you
But the
have
new houses usually command a premium over second-hand, so at least this narrows the gap.
it does. You've also got to factor into account that a lot of all of new houses built nowadays are fully compliant with environmental controls, and they're energy efficient, so they're cheaper to run and they retain their value. Whereas maybe second-hand homes who haven't had that requirement maybe need upgrade in terms of retrofitting and things like that. So it is great, but it does really restrict your ability to buy a house if this scheme is only available to newly constructed properties.
But that's the only qualifying criteria. There's no means test.
No, if you're a first-time buyer, and it also applies to self-build. So if you've got the benefit of buying a site, or indeed if you're lucky enough to have a parent or parents who have agricultural land that can be converted to a site, you can avail of this Help to Buy scheme. Now it's been around for a number of years, and they renew it on a year-to-year basis. So there's no guarantee it's going to be there forever. But at the moment, that scheme is available to first-time buyers who are buying new property.
Okay, let's move on to a different scheme, affordable purchase scheme, which is developed by local authorities and housing bodies.
Yeah. So this is a situation where somebody is buying a new property. Again, it's a newly constructed property, but they are specific houses that are designated as affordable homes. Now, this is not maybe as attractive as the Help to Buy scheme, because any benefit is based on you owning a lesser percentage or equity of the property. And that varies depending on your needs and your ability to raise funds. So, for example, you could have a situation where the local authority will take a 20% stake in the property. So that means you own 80% of it, and you get a mortgage and fund it the normal way. And then in 40 years' time, you're obliged to buy that equity stake back off the local authority. But you can, in the meantime, if your financial circumstances improve, buy it out yourself.
So just in round numbers, let's say the asking price of the property is €300,000.
Yeah.
The council would take a 20% equity stake.
Yeah. 60 grand, they'd contribute 60 grand to the house.
Your cost to buy it is €240,000 initially.
Yes.
But in years to come, then
you can buy out the 20% share. The thing to remember here as well is that you can still get the Help to Buy scheme, so that could reduce it further to €210,000. So in that situation, you would be you wouldn't have to pay that 30,000 back, by the way, and then the 20% share. Whilst you don't own it, you don't pay rent on that 20%. So again, down the line, you might be in a better position to pay for that 20% share. If you were selling the property in the meantime, 20% of the proceeds of the sale would go to the local authority then, So,
but you mentioned this is for affordable properties, so it's not universally available in all schemes.
No, if your listeners are interested in buying property, they can go on to local authority websites and see which houses are would be available for this. And they're usually in schemes, housing schemes, newly built housing schemes, and it's an attractive proposition for new purchasers. Some people are a little bit queasy about the fact they don't own the property outright, but essentially it gets you on the property ladder, and it gives you an opportunity to get a very nice house for less money than you would maybe need in normal circumstances.
So at the end of the term, that 20% equity, is that you buy out the local authority for, is that based on today's money or the 20% value in the future?
Unfortunately, the 20% goes with the property as time goes by. So the value of the property at the date of sale or the date you're trying to acquire the 20% would be the valuation that you would have to pay. It's
a protection for the taxpayer.
Well, it is, in fairness, and but if you feel that you can afford to buy out the 20% at an early stage in the process, that would mean then you would be avoiding that situation or scenario if there was a significant increase in value of properties in the future. Then
Okay, so that is called the Affordable Purchase Scheme.
Yeah.
What is the First Homes scheme?
It's a very similar scheme, and again, it only applies to new builds or new homes. There is some circumstances where a person could be deemed to be a new purchaser if they are, coming out of a divorce or marital breakdown. They may be able to get into that category and that situation, and it's not restricted to the affordable houses or schemes that are designated in each local authority, but it's again a very, very similar situation where there's an equity to be held by the local authority in a portion. And I think that's.
But equally, it doesn't apply to mansions. There are price limitations for it.
Yeah. And I think they vary from area to area because obviously prices in, say, Dublin would be much more expensive than down the country. But there are criteria there, and it's worth investigating as well. And there's a kind of an offshoot of that then as well. It's called the tenant purchase scheme, which is being adapted and amended all the time. And I've had a few of those in more recent times, and that's a very attractive one because you would get you'd be able to buy in at a very low price, but it's different. It differs from the other two in that as time goes by, the value of the equity stake by the local authority reduces by 2% per annum. So the longer you hold it, the more equity you acquire in it without having to pay any money. There would be a situation if you sold it in the meantime, then you would have to pay what balance of the equity held by the local authority is. So that's a very decent and attractive proposition for tenants. But there's criteria. You have to be a tenant to the property for a certain period of time. You have to keep your rents up to date and all that kind of thing. Then
How do you apply?
Again, there's a standard form that you apply, and then what happens is the local authority will issue with an approval, and then you assign an acceptance. There are certain difficulties. The older you are, the less attractive it is because there are certain restrictions on the ability to transfer it to other parties, or a lot of people that I would have as clients would be maybe elderly couples who are trying to avail of this scheme but say, look, I can't afford to retrofit this property. I would like to transfer it to my son or daughter, and they can do it and allow us to live in it, but that wouldn't be allowed under the terms of the scheme. So that would be a slight limitation on that particular scheme. But every single scheme that's there has benefits, but there are little issues that are not there to make life more difficult, but just are practical reasons why some of these schemes are there.
The tenant home purchase scheme, which is somewhat connected.
Yeah, well, that's the scheme that's a kind of an offshoot of the scheme we were just talking about, where if you are a tenant in a property, as I was saying, and you meet the criteria, you can avail of purchasing a cheaper price to purchase the property, and the equity share that the local authority hold will be reduced.
That's the dimension. Okay, so that's the tenant home purchase scheme, the original piece, First Homes scheme.
Yeah.
All right. Let's move on then to we mentioned Help to Buy. Let's move on to the local authority home loan.
Yeah, well, this is another option that may be available to people who are struggling to get a mortgage with the main banks. And again, there are criteria that apply here, and you can apply for up to 90% of the value of the property. But again, there's a limit of €360,000 on the value of the property. Now you have
that will cover, in fairness, most homes here in the Midlands.
It certainly would, but it wouldn't get you a house in Dublin at all. Well, maybe in some locations, but it'd be very difficult to get a house in the city area of Dublin for that type of price. But the criteria is that you have got to show definitive evidence that you were refused a mortgage by two banks. So that shows that you made an effort to try and get a mortgage based on your income or some other criteria. You weren't successful, and then you might be in a position to avail of this loan offer, which just gives people who may not, under the normal circumstances, be in a position to push on and buy a property and to get in and start owning a property, paying back a mortgage, and then you can maybe in time to come convert that to a more standard mortgage if you want, if you make applications down the line with another bank or building society.
Yeah, if you've been refused, it implies a certain level of risk. So what interest rate are they going to apply on this?
Well, they're it's a scheme that the government want to introduce. They're trying to introduce incentives for people to get onto the property market. So it's that the interest rate at the moment is 4.23, which isn't, much more expensive than any other rates that are applicable at the moment. And that may be subject to variations as time goes by as well then,
Okay, so it's not locked in necessarily
No.
then, which can be good and bad.
Yes,
There are
yeah.
some providers, particularly the credit unions, are very attractive at the moment with their rates.
They're a relatively new entrant into the mortgage market then,
And the application process then for the local authority home loan?
Again, there are standardised forms which can be completed and the process to go through. But
Keep your evidence of refusal to send in.
Yeah, you and I have both gone through the mortgage application process in the years gone by, and it's not getting any simpler for people. It really is, a chore and a half,
Speaking of chores and a half, you mentioned earlier the prospect of buying a home that needs some work done. And there are grants to try and make that process easier.
Yeah.
But how difficult are the grants to apply for?
Well, they're not huge different, but there are criteria that need to be complied with, and you are entitled to get a refurbishment grant if the property has been left idle for a period of 2 years. So sometimes you have to establish proof of how that is. A lot of the time, the proof can be established by an examination of the history of the electricity supply to the property, because obviously if there was just a standing charge with a minimal amount each month, you will know that property has not obviously been lived in. So that's a way of proving it. Or you can get declarations from people or neighbours or previous owners and whatever, and that can be a huge benefit to somebody who wants to retrofit or now these properties would not be derelict. They just need to be empty for 2 years. So
let's say somebody has gone into a nursing home.
Yes.
And their house has been idle. Now, are they able to avail of the refurbishment grant if they own the property to make it available for rent, or does it have to be somebody purchasing it?
It has to be somebody who's going to be living in the property. So it's the person who is in the nursing home probably wouldn't be in a position to avail of that. And from my experience, my clients who are in nursing homes, they wouldn't have the wherewithal, energy, or actual desire to start getting involved in a project of that nature for a property they're never going to live in anyway. So
but if that house was being sold and put on the market, it may be more attractive if it qualifies for this grant.
Precisely. And you would find that there'll be a lot of houses that for whatever reason, one reason or another, have been left idle. And I've heard of horror stories where, due to technical issues or miscommunication between banks and owners of property, houses have been left sit idle for years and years and years in the middle of a housing crisis, which is just a scandal in itself. But yeah, a lot of these situations would arise where if I was selling houses on behalf of an estate and the person hadn't been living there for a number of years before their death, then it does make it a little bit more attractive to sell that property on that basis.
Yeah, it's a big lump of money, €50,000, or indeed if it's derelict, €70,000.
Yes, yeah.
But you have to use a registered builder. There are certain boxes to be ticked.
Yeah, again, every single scheme, as you would appreciate, would have criteria or rules. There is an argument that if you use a registered builder, they're going to put in the surcharge, if you like. But I think you can make your own investigations and inquiries and see if the value of the work that you're getting done is worth it, and if you get a contribution of 50,000 towards that, it's significant. This would then, there is also other grants which I wouldn't be an expert on in relation to retrofitting. And I was just listening to reading something about it the other day. There hasn't been a great take up on that apparently, and there is a strong argument that there are only the people who can afford it are actually availing of it. And I know that they've tried to introduce loans for, cheap loans for that purpose, so that they can help fund the project as well as getting the grant. But it's still not. There's not too much of an uptake on that as yet, and I think there could be a reason. There's not too many builders who are registering for it, and just might be a shortage of workforce in relation to that.
Possibly. Likely, as you say, a combination of reasons. I think having to put in the matching funding yourself is part of it. But this property refurbishment grant for vacant homes, you don't have to put in the matching finance. It's €50,000.
Yeah.
So in that sense, it's well worth looking
Yeah.
at. And if you want help navigating any of the schemes that we've talked about today, Tony and his team are available in Tormeys Solicitors in Athlone, tormeys.ie. Thank you very much.
Thank you very much, Will, and good to be back.